Day trading stop losses. This is a aspect of trading that I feel like a lot of people don't talk about, they don't think about. It's just simply like, let's just buy, then we're gonna sell. We don't even worry about losing, right? I don't even want to worry about losing. I don't even care about losing. All I care about is making profits. But what if I told you that your stop losses were almost more important than the profit itself? If you can't manage the risk, well, you're never gonna make money as a trader. So we're gonna break down kind of what I'm thinking about as I'm placing my stop loss and as I'm going into a trade right here in this video. So make sure you guys stay tuned. So right now we're in a trade. Where do I put my stop at, right? Where is my stop on this trade? My stop's gonna be right below these candles. We're looking for a push up. Okay, I know these candles right here are acting as support. I can see on the book map there's support there. So I'm looking for my stop loss to be right at that level, right? Because I think that, okay, you know, that's an area of support. So now I'm taking a little bit of profit as we push up here and get a little push up to the 55s. That last, I'm gonna move my stop to the break even now. And at this point, it's a free trade. We can look for this to squeeze up a little bit more, and we basically get that free trade on the day. But I want you guys to see, like, as I'm entering these trades, you know, where's my stop at? You can see, like, multiple times, okay, touch. We're holding support there. So where I'm gonna put my stop is right below these candles because we have that structure there. So every trade is gonna be a little different where I get stopped out just because the market's being volatile. That's one thing to think about. When you're always like in these trades, I need to be thinking like, is the market kind of chopping around at this level? Is there a chance that I'm gonna get stopped out for something stupid? Like I'm gonna get just a breakdown on the downside for no reason? Or, you know, am I looking here to see if I get to push up over that 53s right now? Trying to push through this 55 level. Right now, resistance on the book map. So I think I'm gonna take my profit. See if I can put an order out right here at the 52. I'm gonna get filled right there. Perfect. You can see here on the book map that resistance at that 55 level holding it down. All right, let's say I buy right there at 53, 54 level, and I'm looking for a move higher. Where would I place my stop loss at? I'm thinking that this is gonna get a move up to the 60s. So we're thinking, you know, a minimum of 7, maybe 10 handles on that move up. Perfect. We're looking for a reversal. No problem. We got the VWAP at the 60s. I'm thinking 7 to 10 handles is a very doable target for this trade. Now, if I'm gonna risk 10 handles, where is my stop? I wanna have at least, you know, 2 to 1, maybe 3 to 1 risk to reward. As this pushed up, way that I look at it, if I'm personally gonna enter this trade, is I'm thinking, okay, the bottom of this candle is the 3-minute candle. We opened here, we squeeze up, we're going higher. So my stop can really be like right here at the 50s, or even, you know, I'm gonna put it here at the 48s. So I'm looking like these last 3 candles held that 48 level. So I can enter here at the 53s and I can basically risk off that 48, 49 level, the bottom of these 2 candles. And that'll put my risk to reward pretty much like right in line with what I want to be, where I want to be. So that's the big thing that I'm focused on, is not so much like, oh my God, like I'm going to enter this trade, I'm going to make money. I want to enter thinking like, hey, like these 3 candles right here showed that there was support at that 48. So number one, if we test that 48 level again and we bounce, well, there's probably a really good chance that we go higher because we've now, you know, ding, tested that level. Long, this also gives me another opportunity to possibly get short. And that's one way I like to really approach my stop losses. You can see we have the overall trend there. So again, you know, this is a very common strategy that we use on the channel. There's a lot of stuff going on right now on the chart, but like, let's just get rid of these lines. We saw we broke to the upside. You know, my stop can basically be right there at the 48s. But what happens if this reverses? That's the great thing about futures. You can trade long and short, you know, back to, I mean, you can literally just go in and out all you want. But let's say that this starts to pull back and we can't hold 48s. Well, if we can't hold 48s, what have we done? We've broke the trend going higher, and then we've also broken through that support. So now that's giving me a reason to get short. I can basically get short where my stop loss is there. So that 48 level right there is a stop, but it's also a indicator like, hey, if we can't hold 48s, I think we're going lower. And then we can get down there to maybe 30s or lower from there. So that's one way to really think about your stop loss. Like I'm placing my stop at an area that if I get stopped out, it's opening me up to another opportunity for a short. The thing about this is, like, let's say I just, you know, I buy up here at the 56. Let's just say I buy right here at 56 right now. I'm like, okay, it's gonna go higher. I buy. Well, where's my stop at? Is my stop here at the 54s? Okay, maybe you're small risk, maybe you're risking 54s, but look at how volatile this thing is. Maybe it drops to the 54s, it stops you out, because you can see the low on this candle right there was 55s. The low on this candle is 54s. And you put your stop to the low of this candle where you're getting stopped out. You just got stopped out there. The problem with entering up here without having like good structure to put your stop at is, you know, at this point, if I'm entering at the 56s, my stop really is like back down here at the 50s. You know, it's like down here still. Pretty much like the low of this candle. This is like the move up candle. Okay, I can put my low there. So I'm risking 5 still, but it's more so like I just don't have a good risk to reward in terms of like where we're going to push up. We're at the EMAs there, you know, we're running into some resistance. We sold off. Like, do I want to enter here and then risk off this level? Probably not. And the thing about this is if we reverse, let's say the market reverses here and we go ding, 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 and then we pull back. Well, there's a pretty good chance, guess what? We're going to bounce off this level and then we're going to go back up. So if we bounce off this level and I get stopped out, what's going to happen? I'm obviously, you know, losing money. The market reverses and it goes higher without me. And then at that point, I'm going to FOMO back into it. So I think the real focus here when you're entering and exiting and you're putting your stop loss is to put your stop loss at a level that would basically invalidate that trade. So the rules are very simple. When you're entering and exiting trades with your stop losses, you're putting stop loss there. If I enter a trade and my stop has to be, you know, much larger than what my reward is, well, then that's obviously a bad trade. So you know right away, like it's not a good trade, don't enter, right? Number 2, if I enter a trade and I put my stop too tight and I put it at a level that could possibly bounce, well, that can also be bad because guess what? The market's for sure gonna bounce and it's gonna take you out and you're gonna get stopped out and you're gonna be like, damn it, and you're gonna FOMO back into it. So you've now taken a loss and you're now trying to get back into it because you're FOMOing back into it because you just got stopped out for no real reason other than getting bounced. So instead of putting a stop at an area that would bounce if we pull back, we really want to look to put our stop at an area that would cause a continuation of a move down. Or if we're short, you know, vice versa. If we're moving up to the upside and I put my stop at a level that I think if we break above, it'll become bullish, well, then that's a good way to look at it. So every trade that I'm entering, I'm thinking, if I put my stop, is there a trade opposite of what I'm doing? Like if I short and the market goes up and then we start to squeeze, well, then I can get long, right? But if I'm only entering a trade, I'm putting my stop just basically anywhere, just because I'm like, well, you know, I only want to risk 2 handles. There's a very good chance I'm going to get stopped out and the market's going to probably move in the same direction that I wanted it to. So that's the big focus here, is only putting our stop losses, only entering trades that would basically invalidate that trade. If I'm entering short and I think the market's not going to go higher, okay, I put my stop at a certain level, but if the market does squeeze higher and it breaks above my stop loss, well, then at that point I'm like, okay, because now I'm thinking, okay, this is an opportunity to get long because I think the market's going to go higher. So that's a good way to really think about your stop loss. Placing your stop loss at a level that would create another trade opportunity. I think that's probably like the best way to really sum it up. Not just putting your stop loss just all willy-nilly and all crazy just because you have a certain risk to reward, right? Like that's the way to really think about this. Like just because you're like, okay, you know, I only want to risk 2 handles on every trade, doesn't mean that you can just enter every single trade and just press buy, put your 2 handles and just wait and see what happens. Like you really got to make sure that you're putting your stop loss at an area that would invalidate that trade, invalidate the overall thesis.
Yeah.